All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. Hold on really quick. I think I screwed this up yesterday, so let me double check. Yeah, I did. Hold on. Okay, yeah, this one is garbage. Um, so I had a I had a couple of questions I wanted to address really fast. Um, Kevin asks, "Hey, given your view on the Aussie dollar and the fact you're long yen pairs, I'm not long yen pairs, Kevin. I was like a week and a half ago, but that was before the Greece deal got done. Like a week. Well, I guess it was a week ago. I'm not long yen pairs, or I'm not. I'm not. I'm not. Don't only yen pair I'm trading is the Aussie yen right now. So let me just make sure you understand that. Would you short the Aussie yen following the recent retest and rejection of the break of the 8-year trend line on longer term charts? Yes, that's the whole reason why I'm short up here. What I should have done last night is give it a little bit more wiggle room, and that's why I actually I'm short at 22, 92.22, and I'm short not too far away from where I got stopped out. I got stopped out at like 28. Excuse me, like 28 or something. So I'm short like really within 8 pips of where I'm at right now. But no, I'm not trading any other yen pairs currently. I had another comment that came in from um, um, Thomas. I did not read Macroman's blog. I will. Thanks for the heads up. Ben said, "Hey Blake, is your target 140 for the U.S. dollar Canadian in 3 months? Would it not be best to trade dips and book profits to reduce interest charges?" Yeah, I mean, first of all, I want to be around for the breakout though. That's the key. And I'm only long the dollar Canadian a little bit more than half size of a full position for me. So, it's not like if I was long a full size position, I would be trimming longs here today if that was the case, but that's not the case. All right. I'm long the US dollar Canadian right now, and I'm long a little bit more than half size position, not quite 3/4 size position for me, and I'm looking to add. Now, if the Canadian breaks through 128, or let's just say 128 and give me the benefit of the doubt and say it trades up to 130 or above, I want to be around for that explosive movement because I think that's going to be explosive. Now, the move from one, let's just look forward, a month or two from now, or even like 2 or 3 weeks from now. Yeah, if we break above 130, I'm going to take profits up there. Then I'll start to buy it on dips, that type of thing. Then I'll just trade it to the long side all the way up to 140. But I want to be around for a breakout because if it breaks out, that's where I'm going to get a big jolt of buying, in my opinion, if that makes any sense. So, all right, just like I said, I wanted to address a couple of questions. So let's go over to the euro dollar and let's delete everything on the euro. And what you'll notice here is, we are obviously quietly consolidating, and it's very choppy. Okay, very choppy. One thing that sticks out like a sore thumb when this is a 4-hour chart. Okay, couple of things that stick out like a sore thumb. Let's do this. That sticks out like a sore thumb. It's a big, huge consolidation. Okay, if you zoom in, this is a 4-hour chart. This sticks out. Tells us how important the support is right here. Okay, today's support comes in right here at 109.80. This is good to know because it's not far away from where we're at. Okay, if we break through 109.80 today, post Janet Yellen, to me that suggests that the dollar is pretty bid, and whatever she's saying is hawkish for the dollar. So let me say that again. If the euro dollar breaks below 109.80, that means that Janet Yellen's probably pretty hawkish in her assessment of, of the economy during the Humphrey Hawkins testimony today at 10 a.m. Eastern. Now, one of the things you can do if you want to, if you're like, well, it's Janet Yellen, she's going to be dove of all doves. And by the way, I think during her tenure thus far as Fed chair, I believe she's been a lot more hawkish than people give her credit for. People have looked at her and said, "Oh, she's the protege of Ben Bernanke. She's going to automatically be dovish." She's been hawkish, more than dovish, in my opinion, and she's holding a pretty hard line too. You can tell that the Fed, they're pretty hell bent on raising rates, and they're just looking. They're they're just looking for, they're just, you know really looking for reasons to raise rates more than looking for reasons not to raise rates, I think. Anyway, 109.80 is really key support. Okay. The low here comes in at 109.85, actually 86, so we can put 1.0985. Now, if you're looking at that and you go, well, wow, the euro is just sitting 30 pips above it. Well, one of the things you could always do is you could always go long the euro dollar if you want. If you really feel that the euro dollar is going to, or that Janet Yellen's going to be a dove of all doves, then get long the euro here. You got a great risk reward. Okay. I don't necessarily think that's the right trade, but if you want to do it, that's, something you can do, I think. Now, where's resistance? Okay. Where's resistance in the euro dollar? And that to me is rather key here, because I think this is not as easy to identify. Okay. Um, right now, I mean, if you want to talk about a tight consolidation, I mean, we could do something like this, you know, something that looks like that. But I really think that today we get above 110. Actually, you know what? We'll just do this. 110.40 or 109.80. And we have a breakout setting up, right? I uh, I think it's pretty easy to identify where the breakout points are, and it's in a tight consolidation. We've been in a tight consolidation all night. We have big events that are happening today. Janet Yellen's testimony is probably going to push us out of this little 60 pip range. And this near term is going to set the direction for the dollar. Okay. So, what's going to happen from here is, we get above this 110.40. We're going to be bouncing back to 111 and change. We get below 110 or, 109.80. We're probably heading back to 109 and maybe even lower. It's going to look something like that. Okay. The great news is we're wound up really tight. Um, that's the great news. All right, let's go look at the cable. So here's the pound. So the pound almost hit the 618 retracement, but what you'll see here, and I think this is a pretty easy to see, is this previous support acted as current resistance. Okay. Also, you have resistance all the way up to 157, so which is the 618 retracement of the entire move. So any type of rally in the cable up to 157, you have to imagine this could very easily give us a false breakout too. If you look at it like that, like we make one more stab higher, everybody thinks we're breaking out. We hit this fib level right here and then reverse. Relative strength is diverging. That could very easily happen. So I think let me remove. I'm just removing a couple things here. So I just think that the cable current levels, not necessarily a short, not necessarily a long, but I do think that 157 is going to be resistance today, and I think 156 is support. Okay, because obviously that's holding us here hostage. So 156, 157, and I think 157 is key resistance. It's a 618 fib, which is golden fib, my favorite fib. Okay, and a lot of people are speculating the Bank of England is going to be the first central bank, or could be the first central bank to raise rates. I still think the Fed will be, but as more people believe that's keeping the pound pretty well bid currently. All right, let's go take a look at this. So as you guys know, the Swissy, there's no if and or buts about this. I'll just go ahead and write down the number since you guys should know it already. 95.40 key resistance, right? There's no if and or buts about that level. So the high here, 95.40. You can see we on the other night we tried to rally in Asia. We went as high as 95.30, rolled back over, very low liquidity environment. Okay, very very key resistance. If we break above that, the Swiss pairs are going to rally. That's I think your cue, especially if you want to be long the Euro Swiss or the Pound Swiss or short the Swiss yen. I think it's the move above 95. The move above 95.40 really would be the indication that you want to be long. Like if we break above 95.40, that's when I start adding to my Swiss exposure from where because what I've got right now is fine. Like I said, I'm up 90 pips in the pound Swiss. Dollar Swiss, I'm up 16 pips. Swiss yen, I'm down 5 pips. The Euro Swiss, I'm down 42 pips. Fine, I'll just sit in those. I have no problem sitting in them. I want to add to them, but I won't do it until we break out here. This is really my how should I say my main driver of Swiss currencies, is right here. Now support for the dollar Swiss, just like we wrote down yesterday, same today. This 94 cent level. It's just huge support on the way down. Still is. Okay. We're in a range environment, but we're close to breaking out to the upside with the dollar Swiss. Euro's looking a little weak, isn't it? Mm-hmm. Dollar yen. So the dollar yen, I mean, think about the retail sales yesterday. The retail sales yesterday didn't even. We pushed this to 123 and then right back up again. The dollar yen here, we have. Not only do we have this resistance right here, okay, there's a gap fill that comes in just a little higher too. So we have, just like we wrote down yesterday, 123.70 and 123.90. I would not be surprised for us to see 123.90. 123.75 is the 618 retracement. That's given us that double top thus far. But man, I tell you, this dollar yen just holding up pretty well. So 123 is support. Okay. 123.75, and just above that is 123.90, which is a gap fill. Okay. Range environment. Let's take a look at the Canadian. So here's the Canadian. Um, I asked a really good question. I just happened to glance over and see it. So let me address it really quick since we're just talking about the Swiss pairs. I asked or said, hey Blake, given your opinion that the market is forming a rounded top, if risk appetite comes off, won't it have negative implications for your Swiss positions given its status as a safe haven currency? Possibly, more than likely not. So let me give you the answer and the reasoning for that. When is, and I'm going to ask you guys this question before we get into this Canadian analysis, since we got a little bit of time here. When is the Swiss a safe haven currency? During a what type of crisis? During a what type of crisis? Benedict, great answer. Now, it's more of a safe haven status during a European crisis. Okay. I don't necessarily believe that it holds the same status as the yen or the dollar. It's got too much of a negative carry right now for it to really. I believe so. Let me put it this way: if we had a rounded top in the market, okay, we had a rounded top in the market. Let's say the stock market risk aversion started to pick up, and by the way, what is risk aversion in this market? What, losing 5-8% from current levels? I mean, it's we haven't really. Most of you that are sitting here listening to this webinar haven't even you're probably still popping zits on your face when the last time there was any risk aversion in the market. That's how ridiculous it is, you know. But in this market, risk aversion is really, what is it? I mean, it's a little 5% decline in equity prices from here. Um, yeah, you were popping zits, right? So if the stock market, like, let's say, pulled back, 5-8% from current levels, maybe even 10%, I think the Swiss yen will come under pressure. The Swiss franc will come under. Now, if if the stock market came down because Greece exited the Eurozone, that's not going to be the case. I don't think the Swiss yen will go anywhere. But I think the dollar yen will fall, and I think the dollar Swiss will fall. So it really has to be more of a European crisis, and maybe war. Yeah, I mean, if it was like Russia, like if Russia invaded part of Europe, the Swiss franc would strengthen, in my opinion. But if it's just equity markets rolling over and pulling back a little bit, I think it's the yen and the dollar that'll benefit more than the Swiss franc. Okay, so I think you have to understand the reasons why. So it's a great question though, and I think there's some validity there. And I think, yeah, the Swiss franc might have a little bit of safe haven status, but remember, it's really expensive to hold the Swiss franc. It really is. For institutions to hold it, they'd rather just say, well, screw that, I'll just go buy dollars. You know what I mean? Okay. I hope that made sense. Um, IS says, thanks for the great insight. Really appreciate the service you provide. You're welcome. Thanks. I appreciate that. I appreciate the comments. All right, so here's the Canadian. So yesterday, I forget who it was. It was one of you guys, and I think it was Al or somebody had said, "Hey Blake, we had the 4-hour chart, which here's a 4-hour chart. Relative strength was diverging on that breakout yesterday, You see we were breaking out yesterday in the dollar Canadian, and relative strength is divergent. Said, what do you make of that? And I'm like, well, it's probably not going to break out today, not ahead of the Bank of Canada tomorrow. So, and it didn't. It pulled back. And what the Canadian doing is basically consolidating in price. But look at where relative strength is on the 4-hour chart now. We're consolidating here, and relative strength is back to mid-range. You know what makes that great for people that are long like me? If you go up here, it allows for relative strength to head back higher. Whenever you're this is exactly the price action that you'd see in the if you were watching the US dollar Japanese yen, as the US dollar Japanese yen was going from 82 yen to 102 yen. Same type of thing. You'd go up, relative strength would get overbought, it'd moderate, it'd go back to neutral. Price would explode again, relative strength would start rallying again back up to overbought. We'd get overbought, price would stabilize, relative strength would go back to neutral, then price would explode again, relative strength would go up. And so, you keep looking at it going, man, relative strength keeps getting overbought, but, the dollar yen doesn't stop it going up in price. Well, that's how relative strength works. Okay. So the nice thing is, and I think what we can do here with the Canadian in particular is we can do this. Okay. And I'm going to just do it like this. Something to like this effect. Okay. Let's change this color here. Okay. So really, that's what we're dealing with. A nice little, upsloping wedge, which, really tells us that this support here in the Canadian, let me get rid of this here. Really, I guess 127 is going to be pretty good support. 127, maybe 127 and a quarter. What was the low here? 127.15. Okay. And resistance is, obviously 128, 128, is it 25? I think it's 125. High, 32, okay. Let's just call it 30. We are still bullish. It's still trending higher. It's up against resistance, yes. Okay. But still trending higher. Okay. Man, the Euro Canadian probably just came down under pressure, didn't it? Woo. And the Canadian firmed up there. Hold on. Okay. Let's go up to, so we just did the Canadian. I think you got a pretty good idea of where the breakout points are here. Below 127.15, 127.15, 127. We come out of the wedge, okay, to the downside. And if we break above 128, 128.30, then, you got a nice upside move here. Let's go take a look at oh shoot, it's already that time. Okay, when we come back, we're going to do the Kiwi, do the Aussie, do the dollar index. We can look at the Nordic currencies if they're moving at all. But I'll be back in a few moments. Don't go anywhere. When I come back, we will. We're gonna, we're gonna go ahead and get this party started, and then we're gonna get ready for the rest of the day. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. We're going to finish up our analysis here. Let's start with the Kiwi. We got to do all this because we still have some data coming out today. We have industrial production, capacity utilization. We got producer prices. We got Canadian wholesale sales, I believe. So I mean, we still have some data we got to get through. All right, so here's the Kiwi. Kiwi, man, look at this downtrend line. I mean, this is what I said earlier about the Kiwi, and I'll just here I'm gonna just leave this like this. I, I don't think we need to go into any further detail as far as analysis, but when you look at this Kiwi dollar, I mean, just look at it. I mean, this thing is ripe for a squeeze, ripe for a squeeze. It's so ripe that it probably won't it probably won't happen. I mean, does it is it not like extremely obvious to you when you look at that Kiwi that it's going to start squeezing? I mean, how many of you feel otherwise? I mean, I look at it and go, man, this thing is just ready to start squeezing. You know what I mean? But it's so obvious that I think it's not going to happen. I mean, it just looks like to me like, oh man, this thing is just gonna squeeze. You know, it looks like it's just gonna start ripping. But I don't know, man. I didn't, but let's put it this way. Okay, as long as it stays below 67.40, it ain't going nowhere. And I mean, I don't want to write down this support, but maybe I'm gonna have to for now. Hey, can you guys hold on for just a second, please? Stand by. I got to put you on hold for just a minute. Stand by. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Sorry about that. I've got a bit of an animal problem here in my house, so you have to bear with me here over the next 30 minutes. So we have Daryl made a good point. We do have milk auctions or dairy auctions today, and we also have CPI later this evening. But we'll see. I mean, this right now, this is what we're dealing with today. And remember, it's all about Janet Yellen right now. Okay, it's all about Janet Yellen and as far as the Kiwi goes. So 67.40 and 66.60. Okay, for now, we are still in a bearish trend, and maybe it starts squeezing. I mean, I think it's cool. Or 66. Sorry, 66.60. Okay, and 0.6740. We are obviously still in a very bearish trend, but I think it's attractive that we might start squeezing. I'm as tempted as I am to just start buying the Kiwi here. You can't do it yet. At least I can't. I mean, you can. I mean, I just I'm starting to think that we're gonna do this. Let's see here. Do something like this, and then like that. That's the way I feel right now. But you know, I just don't think it's done yet. $0.64. Seems like the next logical, point. I just, if we get down towards 64, 65 cents, then, that might be a place where we start squeezing. I don't know. Anyway, I just don't think it's right yet. As much as tempting as it seems right now, just to start going long, I can't do it just yet. Let's go over to the Aussie. Kevin says the Kiwi has fallen over 2,000 pips over the last 12 months. Yes, it has. And that big fall has really benefited to my bottom line this year. My year has been made because of the Kiwi. I've been aggressively on the short side for the last 12 months. This last month has been really the only month that I haven't had any short Kiwi exposure. This last 3 or 4 weeks. Everybody here that listens knows that. It's the only this last few weeks has been the only time I haven't had any type of short exposure for a while. So, and it has really been the basis of my last, year's worth of trading has been just being on the short side of the Kiwi. Okay, so here's the Aussie. I think the Aussie, we just have to look at something like this. Okay, something to this extent. Okay, 74.90, and then obviously, oh wait, hold on. Hmm. It's hard to say. Okay, looks like very, very key support through here. But I'm not going to write that down because it's very close to where we're at. I think 74.90, and then I mean it looks like it's just about ready to roll over again. But the Chinese data is strong, it was strong overnight, and it still didn't. It wasn't enough to push it higher. Um, 74.90. Still bearish. Um, I mean, I don't know where support is. I can write down 74.40, but I'm going to actually have to write down 73.75. I mean, because that's really where support is. 73.75. Key support. 74.40. Okay. Just leave it like that. Let's go take a look at the, hold on really quick. Let me go grab the dollar index. Because the dollar index, whoops. Let me pull up the dollar index really quick. I guess it's really the same. What? Hey, what's up with my right hand scale? Why is that in percentages? That's not where it should be. But that's all right. I'll just write down the numbers. But how in the hell why is this in percentage? Where do I change that? You guys know? I must have accidentally clicked somewhere. Crap. Anyway. Oh, is it because I did a compare? Uh, Thank you. Thanks, Dennis. But here, let me get rid of that. That. There we go. Good. Okay, got it. 97. Thank you very much, Dennis. 97.20. 3. And then support comes down here at 95.50. 95.45, but it's 95.50. And we're still range bound here. Okay, and let me take a real quick look at the peso, see if there's anything happening here. I haven't looked at it in a while, so let's take a look. Okay, hold on really quick. This is... Broke that trend line. It's just been down ever since. So nice gap to fill down here. See that? But look at this. Look at how strong the support is right around here. This, you know, if we get any dollar weakness, for those of you that can trade the peso, this actually might be a good short. I mean, because, you know, it looks like it's wedging lower. Flip side is if we get some dollar bullishness, it could very easily just rip higher too. Here's the Norwegian krona. Well, that's choppy. A whole lot going on there. Oops. Here's the Swedish krona. This Swedish krona. This right here. Keep an eye on it just in case we get a bullish dollar move today. Okay. That's a nice cup and handle developing. Breakout point is at 860, so let's write that down. Okay, support is at 840. Right here. It's actually 839. Okay, and this is 8.60. And I'm going to put an asterisk next to that. We're in a range right now, but if we break through, like I said, this is a nice, real clean looking cup and handle pattern. You know, if we okay, so if we break out, then we have the potential of really moving, you know, higher. We'd obviously have to see some dollar strength come through the market in order for that to happen. I just think it's something that needs to stay on the radar for those of you guys that can trade it. Okay, I have to just give me 1 minute, guys. I have to just deal with my my zoo. Give me a